The motor trade has gone through some pretty turbulent times in the past few years due to the worldwide economic recession, but now there are signs that it is starting to regroup as the huge amount of surplus cars that was available has now been considerably lowered. However, there are still worrying things abroad, things that may affect all parties including the manufacturer, the car dealer, and the driver. It seems that our wonderful government are toying with the idea of changing the way we pay car tax, both at source when we buy the car, and later when we run the car. They have instigated a public consultation which at this point in time is still work in progress, and any conclusions are yet to be aired. In the meantime, several car manufacturers are outlining ideas for how they can help buyers to negotiate any potential increase. VRT, vehicle registration tax, has already come under the limelight in recent years with engine size, fuel consumption, and emissions being reviewed to create new bands of tax. Whilst this last change was in the main beneficial to everyone, especially in terms of reducing emissions and helping to clean the environment, there are fears that the new consultation currently underway may not be quite so helpful. With the costs of fuel still being kept relatively high, despite reductions in the barrel price, it is feared that an already expensive cost of motoring could be about to get even more expensive. If this happens, then it is likely that both the car sales and the car maintenance and repair sectors will be hit, this at a time when the motor industry is only just beginning to show signs of recovery. So it's going to be time for everyone involved in the motor industry to begin tightening their belts once again, and that means reducing their operating costs to the minimum. Motor trade insurance is a substantial part of any motor trader's operating costs, and anything that can be done to lower this overhead will go straight to the bottom line, so it's an area that is likely to come under intense pressure in the coming months. Insurance companies are acutely aware of the situation and are already aligning themselves to come up with some great offers. The online community of insurance companies is particularly active, and by visiting some of their websites you'll be able to see how proactive some of them are being. But motor traders are going to have to try warily. There are literally hundreds, even thousands, of online insurance companies all vying the business, which is great from a competition point of view, but does mean that some may be willing to cut corners in order to obtain orders. Motor traders must therefore do their research properly to ensure that the motor trade insurer they settle on offers the most comprehensive and best value motor trade insurance on the market. So, if you are a motor trader who is looking to reduce your operating costs whilst at the same time maintaining or even improving your motor trade insurance policy, the time is right. Take action now by going online and seeking out the best deal while the opportunity still remains. Martin Piper is an expert on motor trade insurance, and after working within the industry for many years he now writes and shares some of that wealth of knowledge on a variety of subjects like how to obtain the best motor traders insurance for your money. Share this video and subscribe for more interesting auto insurance tips.